Welcome to the B.F. Anderson Market Report, Technical Report on September the 2nd. You know, Alan Greenspan was interviewed recently on Bloomberg, and Greenspan's been around the block a few times. He's 95 years old now and has had a lot of experience with worldwide economics. He wasn't very big on politicians. However, he did favor Margaret Thatcher. He thought that Margaret Thatcher was one of the most competent politicians in history that he dealt with. Now, Greenspan, in this recent interview, basically stated that, you know, the U.S. government is not going to default on its debt. It's just not going to happen. And what will happen instead is that they're just going to print more money. So this has to be inflationary. Now, if you go back to Roman times, you know, the beginning of the Roman Empire, you had very large gold coins. And by the end of the Roman Empire, you had small lead coins. And it's just debasing of the currency. So the problem here is that we have debt. It's not going to go away anytime soon. And we're just going to have to inflate our way out of this. So what I want to do is I want to go over a few graphs with you on trend analysis. Now, trend analysis is where we don't look at forecasting. Pattern analysis is where you look at the past and you look at price patterns and try to determine the future from the past. We're not doing that either. We're simply looking at what trends are in place today. So let's start with gold. Now, the way I've set this graph up is there's no price on here, a current price. I mean, the current price of gold is $1,317.10, continuous contract. What you want to look at here, though, is three moving averages. Now, a moving average is where we take a price and move it through time. So what I'm using here is a 30-week moving average in price, a 40-week moving average in price, and a 50-week moving in price. Now, we don't use this in our analysis of stocks and markets, but I'm just trying to use this as an illustration as to how trend following works. So the way you want to see a trend is a bullish trend. Is when the blue line, which is the 30-week, is above the red line, which is above the green line, which is the 50-week moving average, and all three moving averages are moving up in an uptrend. So the way you use trend analysis is that you basically have to understand that trends, once they become established, they tend to last a lot longer than people realize. For example, bull market started in 1976, did not peak until 2000. Now, it had bumps along the way, but that was a 24-year trend. Take the bond market. Interest rates peaked in 1982. So basically, interest rates have been dropping for 35 years. So these trends tend to last a very long time. So why would gold be going up and at the same time interest rates staying low? Well, I believe that we're starting to get inflation, and gold has always been correlated to inflation. So as you can see, the price of gold is in an uptrend. Now, here's the Dow Jones Industrial Average. Blue is above red is above green. All three moving averages are moving up. This looks like an uptrend to me. Now, here's the New York Stock Exchange. Again, these trends are starting to reverse to the upside. Here's the S&P 500. Again, we're seeing the blue above the red and the red above the green. So the trend is up for the S&P 500. Now here's an interesting indicator. This is called the volatility index. This is what a lot of people refer to as the fear-greed index. When the index is going up, like in this case, there's a lot of fear. And people buy bonds, they buy gold, they buy defensive type of investments, Procter & Gamble, Johnson & Johnson, those types of investments. Well, all of a sudden here, we're starting to see a real drop in the VIX, which is telling us that greed is starting to become in an uptrend. People are becoming more greedy. Now, there's kind of a paradox going on here, because if interest rates were going up, we're still seeing an ETF called the iShares Select Dividend. We're still seeing an uptrend in that group. We have not seen a reversal there. Something to watch. Same thing goes for the IEF, which is the 7 to 10 year Treasury note. Same thing. Trend is up. So what's going on here? Gold's going up. Interest rates are continuing to stay low. It's interesting. Now, this is more important. This is the Russell 2000, which measures the small cap stocks. Now, it just has been in a terrible downtrend, and you can argue 2015 and really 2014, was that a bear market in small cap stocks? Yeah, I think it was, and I think it ended in around February of 2016 when we made the low. Now, all of a sudden, we're getting a reversal here, but you can see the blue is above the green, and the green is still above the red. So we're still in the very early stages of an upturn in the small cap stocks. Now, just to kind of look at this is kind of interesting. This is an ETF that shorts the S&P 500, and you can see a definite downtrend here in that indicator, which is bullish, very bullish. Again, back to bonds again. Here's the 20-year Treasury note. Same kind of thing. Interest rates are continuing to stay low. Now, this particular ETF is the Vanguard Information Technology, which is technology. The tech stocks are starting to, really get ahead of steam here. And this kind of flows into the Russell 2000, because this tends to be more of a small cap universe. Now, here's the Vanguard REIT ETF, which is, again, a very interest rate sensitive group continuing to stay in an uptrend. Now, this is an interesting as well. This is the emerging markets. Like the Russell 2000, this has been a very, very difficult group, but we're starting to see an upturn in the emerging markets. Now, we're talking Asia and we're talking Latin America. Here is the materials sector. This is another very economically sensitive area. This would be, mainly metals and things of that sort, materials used in construction. Again, we're starting to see an uptrend there. Here's an interesting group. This is energy. We're starting to see maybe a bottom in the energy sector and an upturn in that group. Now, one group that really needs to get going, because this is the crux of the economy, is the financial sector. These are the banks, and you can see we're starting to see some improvement, but very, very early, and they've had a tough go here in the last 2 years. So in conclusion, what I'm trying to say is that trend following allows you to see what's happening right now. It doesn't get into forecasting. My dad used to say, why do we need economists? It doesn't seem like their projections are worth the paper they're written on. Well, stay away from projections. I think the best thing to do is just look at what your current trend is and go with the trend. The trend is your friend. So I'll be back in touch next Friday. Thank you for listening.